Donald Trump is reportedly poised to hit China with $50 billion worth of tariffs over intellectual property violations. In response to the report, China's former vice commerce minister said such a retaliation would be a declaration of a trade war. And when it comes to tensions between the U.S. and China, currency is often at the center of the conversation. To break it all down for us, we're joined now by Adam Button. He's the chief currency analyst at ForexLive. Adam, we have often heard about this worry. I feel like U.S. officials try to avoid that word, currency manipulator, but I can't help but think about the currency story that might be at the center of this broader trade war story brewing between China and the United States.
Well, Donald Trump has long said that China is a currency manipulator. He promised to name China a manipulator on day one of his administration. Of course, he didn't do that, but he might be edging towards that now, along with a whole host of other measures.
And I wonder, when we look at what's happened in the currency market, like a lot of people pointed to the Chinese yuan appreciating against the U.S. dollar, almost coming to the conclusion that maybe China was allowing that to happen to try to potentially appease the Trump administration. Do you think there's any truth to that?
Well, I think that was this early strategy for China. And even before Trump came in, they had allowed a gradual appreciation in yuan, recognizing that it was a manipulated currency. I mean, for the people out there who don't know, the yuan isn't freely traded. It is controlled in a band every day by the People's Bank of China. And they will let that stretch in one direction or another, but they use it as a way to influence the economy. So the weaker currency allows them to export a little more, and it ramps up the economy. But after a period of liberalization, they have started to tighten that up again.
And we did a segment earlier with the trade expert Chris Sands, and we asked him if there's a battle between China and the U.S., especially during all this NAFTA uncertainty, what does it mean for Canada? And he noted that there is a potential concern that Canada gets treated as a potential backdoor for Chinese goods, and then there's some potentially contentious issues that arise there between Canada and the U.S. In the currency market, is there anything you're watching for with, say, the Canadian dollar? Is there any way to tie it back to this story of China versus the U.S.? If people are watching that story today, is there anything to think about in terms of how it would impact our loonie?
I think Canada is really, in a sense, at the center of it all. So you have the U.S. right now is talking about tariff exemptions. The tariffs on steel and aluminum are supposed to go into effect tomorrow. Now, suddenly everyone is getting an exemption. The EU will be granted one probably in a couple hours. Trump is hosting a press conference at 12:30 Eastern. And in that, they have negotiated with the EU to circle China. One of the demands they made was to say you have to target China for unfair trade practices. And you have to start wondering if that's part of the NAFTA negotiation as well. So Lighthizer he's the U.S. negotiator, has always been a China trade hawk. And he might be saying to Canada, all right, do you want to join this coalition of the willing to fight a Chinese trade war? And Canada might say yes, Mexico might say yes, we might sign off on NAFTA in a month. Now, that's a good thing. But then you have to start asking, is a global trade war with the rest of the world, led by the U.S. and China, such a good thing for Canada? Is it a good thing for global demand, for commodity demand, for equity markets and risk appetite globally? And, you start to argue against that and worry about it.
And just for those who are wondering about where the loonie could be headed over the course of this year, we mentioned we did this poll, and more than 40% of the respondents said they're thinking of staying home this summer because they're worried about the value of the Canadian dollar versus the U.S. dollar. Just as you look ahead, forecasting for the rest of the year, where do you think the Canadian dollar is headed versus the U.S. dollar?
Well, I think there are a lot of headwinds for the Canadian dollar. It's not a good scenario. To get a NAFTA deal, they really have to run the table. It's like the NHL playoffs right now. There are a few teams just on the outside, but they need to really win out to get there. The deadline for NAFTA is probably the end of April, and I just don't see how it can get done. At the same time, oil could be a tailwind for the Canadian dollar. The hawks are starting to really rattle the sabers in Iran and in the Middle East, and I think that could be a tailwind for oil, which is up 6% this week, and no one is really even talking about that. But net, the worries about trade a little bit of overvaluation, and a lot of markets will leave the Canadian dollar on the defensive. And I think the Bank of Canada on the sidelines. And don't forget, we have a speech later today from Carolyn Wilkins.
Absolutely, and we'll also be checking in with Tiff Macklem here at BNN, formerly of the Bank of Canada. Really quickly, about 10 seconds or so, but you mentioned oil. What's the relationship between oil and the loonie these days?
It's weakened. As long as the Canadian dollar or oil, pardon me, is in this $60, $65 range, I don't think the Canadian dollar gets too excited. You know, it is probably one of the smaller factors, but if oil can get up above $65, it's around 63, 64 right now, then I think we'll start to see a little bit more of that reflected in the Canadian dollar.
Adam, you ran through a lot with us. We always appreciate your insight. Thanks so much for joining us. Adam Button, Chief Currency Analyst at ForexLive, joining us this morning.